Nvidia's success in the tech industry is attributable to the rise in AI technology and their GPUs, which is crucial for AI tasks like training large learning models. Now, major tech giants are running in a race to capture the $4 trillion AI market, calling GPUs the new oil or gold in the technology sector. The AI-led bull run can last for another 2 to 3 years. Yes, you heard that right. And in a year from now, investors can be looking at 3 trillion to 4 trillion market caps for major tech companies. I do believe that this can happen easily within a year. Now, many believe another tech bull market is just starting, and I'll give you my opinions on that later on in this video. Companies like Google, Microsoft, Amazon, and Meta are all heavily reliant on Nvidia's AI chips, which are specifically designed for AI applications, offering significant performance boosts compared to traditional CPUs. However, with high demand and limited supply, some tech giants have either already announced or are looking to launch their own AI chips to have an edge. Google has been making and relying on custom-designed tensor processing units, TPUs, to power its AI models. Their latest chip, Trillium, which sounds like something Lil Wayne would rap about, was announced at the Google I/O event in May and boasts a claimed 5 times the performance of its predecessor. Amazon, with Amazon Web Services, has Trainium, and it's the machine learning chip that AWS purpose-built for deep learning training. Last year, the company unveiled Trainium 2, which is claimed to deliver up to 4 times faster training performance and 3 times more memory capacity compared to first-generation Trainium chips. Anthropic, which is an AI company with a $4 billion investment from Amazon in March, plans to leverage the tech giant's AI chips. Then we move to Meta, and they're also focusing on AI, and in April, Meta revealed plans for Artemis, a second-generation AI chip surpassing their initial Meta Training and Inference Accelerator product, which launched last year. AMD, Advanced Micro Devices, unveiled its latest AI processor earlier this month, which is set to be made available for fourth quarter of 2024. AMD also introduced an upcoming series of chips expected to be available in 2025 and are aimed at performing 35 times better in inference, the processing of computing generative AI responses. Now, AMD revealed another advanced series which will arrive in 2026. Intel has also introduced their first generation Intel Gaudi AI deep learning processor. The company says that the architecture of the chip has been designed for deep learning performance and efficiency. Of course, Apple is reportedly also developing its own AI chips. So there you see all these big tech companies are starting to produce and develop their own AI chips in-house. All of this is so that these companies can be less reliant on Nvidia's chips, help control costs, and hopefully expand in the AI race and collect added revenue in the process. I believe Apple is going to be the #1 AI winner overall and made a video on that recently. But what other company that I did not mention yet do I think has huge AI profit potential with its own production of AI chips and will be in second place or maybe even in first place someday in the AI race? Well, that's Microsoft. Plain and simple. They have the second largest cloud platform, the largest wide moat productivity software with Office 365, a popular head start on AI chatbot integration with Copilot, and have the dominant popular developer platform product GitHub. Now, regarding AI and AI chips, I see 2 areas where Microsoft has huge monetization potential. That's with Copilot and Azure. Microsoft is working on its own AI chips under a project codenamed Athena to cut its reliance on Nvidia. Now, I want to briefly talk about the AI value chain before I talk about this next part, and it's a process that involves capturing, curating, and analyzing data to prepare it for AI and analytics. So the AI value chain has multiple layers, including the enabling layer, the compute layer, the infrastructure layer, the interface layer, the intelligence layer, and the application layer. The AI value chain also depends on high quality data that organizations capture, curate, and catalog in real time to feed AI and analytics systems. So Athena chips, along with Azure, position Microsoft to benefit from the opportunities in the enabling layer. Now, the enabling layer is where a company provides the foundation for AI development, such as semiconductor production, chip design, cloud and data centers, and power supply companies. Not only that, but the company's OpenAI investment is an opportunity in the intelligence layer, which is where you are developing the large language models. And with Copilot, Office 365, and GitHub, that will help Microsoft profit in the application layer of AI, which are those companies that embed the tools from the intelligence layer into specific use cases where they can then go charge subscription fees. So due to these opportunities and potential, many Wall Street analysts are bullish on Microsoft. In fact, it has a price target at the high end of $600 per share. That's about $150 more than where it is now per share. Analysts believe Microsoft's AI ecosystem around its products would strengthen its cloud division thanks to Microsoft's integration of AI into its cloud products. Microsoft's intelligent cloud segment's profit in the last quarter totaled $12.51 billion, a whopping 32% growth year over year. Now, investment management firm Mar Vista stated the following regarding Microsoft in their latest investor letter. They said, Microsoft Corporation continues to occupy a strong position poised to capture market share as businesses navigate the transition to digital-first landscape and embrace generative AI-driven solutions. The company's commanding presence in the enterprise arena, combined with its comprehensive product portfolio encompassing infrastructure as a service, platform as a service, and software as a service, establishes it as a crucial provider of IT solutions for companies of all sizes. So Microsoft is effectively executing its strategy in a sizable market by offering a roadmap for digital transformation and adoption of AI-driven solutions such as ChatGPT while enhancing productivity and reducing costs. Microsoft solutions should exhibit resilience even in a more challenging macroeconomic environment. My conviction is that AI stocks hold greater promise for delivering higher returns and doing so within a shorter time frame, and Microsoft is one that I believe will do this successfully, which will lead to higher and higher profits and revenue growth generation. Now, that is not to say that other companies listed won't succeed. They will, but I just think Microsoft has the most secure and diverse path filled with ample opportunities, whereas the others may not have this and offer a bit more risk with less diversification and with less opportunities. So for me, I would buy Microsoft slowly now, but would buy more heavily should it fall below $400 per share. With a 10 plus year investing horizon, we will all most likely look back and wish we bought now, as is the case with Microsoft almost every decade that passes. Now, is Nvidia at risk of significant decreases in GPU sales as all these big tech companies race to build their own? The short-term answer for me is no, but the long-term I believe is yes. Nvidia is far in first place, and if it were a race, it means it will be hard for others to catch up if Nvidia does not slow down or make any major mistakes. But don't underestimate Microsoft, Meta, Apple, Google, or Amazon. The problem is that Nvidia's main customers are these big tech companies, and slowly over time, I think that these big tech companies will succeed at reducing their reliance on Nvidia chips, but the question is, by how much? So if you're an Nvidia investor, I would not bail on this company. It's still a powerhouse of a company with plenty of room to grow and innovate. It's also trying to build up a subscription-based model, so it's important to follow and see if they transition to more software and subscription-based services. That would be a reason to keep your shares, but if they cannot successfully do so, I think that would be the biggest risk and potential for loss of your investment. Now, they have a more concentrated group of customers. They are less diverse than other big tech companies in offerings, and demand with hardware is not something that stays constant. There will be a dip in that someday. So is their market cap justified? Remember, their market cap has more than tripled from a year ago. I don't know, that's up to you, but from my perspective, I think they will run into a cool down sooner or later, which we are kind of seeing now. I mean, a company that big with a 70 plus PE ratio is a stretch in my opinion. So I would evaluate the allocation it takes up of your portfolio and set a target. Maybe your target is 5% of your portfolio and it now sits at 10%, which means trimming the position is probably something that would be beneficial. As Nvidia flirts with being the largest company in the world, it may be beneficial to take some gains. But let me know your thoughts on the AI chip race and if Nvidia is in trouble or if you feel they will remain the market share leader in GPU chips and beyond. Also, do you agree Microsoft will be one of the biggest winners in the AI race? What company would you choose if you disagree with me? Are you buying or staying away from big tech? Some say it's in a bubble and others say it's the beginning of another tech bull run. I think there's still a lot of room for growth as I see this AI movement as the next big opportunity for tech as it's talked about everywhere, and not just from people on social media, from professionals in many different fields. And I think it will take years and years for it to fully play out, so I will keep buying. Now, here's a look at my portfolio. It's doing relatively well. Big tech keeps going up, up, and up. You'll see I have Microsoft right there. It's one of my biggest holdings. I also have Amazon. So those are my two big tech AI plays. But let me know if you have any questions about this portfolio. I share it with every single video. Follow my journey. Be sure to subscribe so you can see how I do with my strategies. I'll share my failures and my successes so you all can learn with me. Thanks for joining. Be sure to subscribe for exciting upcoming content, and we'll see you soon on Mark Arnold's Finance.